Now, the National Treasury is central to providing leadership in economic, public finance management, and development planning for shared growth. This provides a great opportunity to fundamentally transform how Kenya's assets are acquired and managed. Now, that's just part of the definition drawn from the mandate. But what do these words mean in regards to the upcoming Kenya Pipeline IPO? Let's go in and find out. Oh, we have camped at the office of the National Treasury, specifically for the Director General of the Public Investments and Portfolio Management. That's Lawrence Kibet. The reason we've camped here is because, yes, he has a busy schedule, but we are at a very vital point where they are looking at every detail to make sure that in the run-up to the Kenya Pipeline IPO, all the details have been considered. Now, the person I'm about to speak to is a CPA. Lawrence Kibet. The reason I bring that up is because CPAs are very keen on detail and nothing misses their attention. Thank you so much for having us this evening. And the first question on the Kenya Pipeline IPO, someone following this particular build-up to the Kenya Pipeline IPO is definitely looking at it as the whole, the bigger picture. Just the other day, the Safaricom. So is there something that's informing this? Is it an economic reform process, or is it an effort to salvage some economic shockwaves? What has informed this particular move?
Thank you very much, Mark. It's indeed a pleasure to be with you this evening. I'm very, very excited about the Kenya Pipeline Corporation IPO. We're really living in very exciting and very optimistic times. You will remember that for our current medium-term development plan, the government intends to resolve three major economic challenges that continued to pose risks and challenges within our economy.
Yeah.
So these three main challenges, number one is the vulnerability of our economy. How do we deal with the vulnerability of our economy so that we can shield it from the external shocks which we've witnessed in the past? Some of these shocks include COVID-19, which we saw its devastating effects in 2020. The other one is the war in the Far East, which, though miles away, has caused a lot of devastating effects.
Yeah.
Mostly around constraining supply chain flows. The other aspect is, of course, volatility of prices of commodities, and in some instances, even shortage of those particular commodities.
So in what I hear, just to interject, is that it's not an isolated move. It's informed by activities that have affected the economy. However, it sounds like there is a very strategic plan for this particular IPO and economic reform being part of it. Would you give that as a correct analysis?
Very, very correct, Mark. So the IPO is basically part and parcel of the larger economy-wide and state corporation reforms, which the government is currently pursuing. And these particular economic-wide and state corporations reforms are not just an end in itself, but it's basically strategic responses to both policy and business dynamics.
Right.
Some of these dynamics, number one, will include the coming of age of our private sector. We now have a very strong private sector which can deliver commercial services much more efficiently compared to government. The advantage that the private sector has, number one, is that adaptation to technology. They are quite adaptable to technology compared to the public sector.
Yeah.
The other one is the opportunity of accessing diverse sources of capital, meaning then, with access to diverse sources of capital, then in terms of moving with growth, then it has much more. It's much more flexible for them to be able to get opportunities for growth. One of the other most important aspect is the issue of also developing the capital markets, and basically capital markets development is intrinsically linked with economic development. So with the capital markets, it gives you a wider array to access resources much cheaply, which will then fuel additional growth without recourse to the exchequer.
And I'm sure you're familiar with the analogy in the Bible of washing of hands and ridding of self responsibility over something. And in this regard, there has been that view that this privatization, ceding 65% stake, is a government washing its hands. Once the shareholders are in, you've opened the door to the shareholders. Who guards the gates? Who makes sure that the shareholder, even if prices do what they do within a listing and within the markets, go up or down, that things remain consistent and constant in terms of operationalization?
Thank you very much. So in this respect, one of the other aspects that we really must recognize is that for Kenya, our regulatory space has really evolved over time. We now have what I can call a mature regulatory environment. We have institutions which have developed over time. One of them, like in the energy space, the Energy and Petroleum Regulatory Authority, what is usually called HIPRA. We have the Competition Authority of Kenya, which deals with issues around competition and consumer protection. In the telecommunication space, we have the Communication Authority of Kenya. If you're dealing with citizens' data, we now have a data commissioner in place. So largely, our regulatory and policy space has really evolved over time and matured, making us ready to allow for private sector-led economic development without in any way undermining consumers or minority investors.
And essentially, they won't be operating within a vacuum. There's rules and regulations that, as you say, have come of age that would dictate how things are run. Now, there's the aspect of intervention. What, in your view, as you say, the regulators and the regulatory environment is very mature, what, in your view, would warrant an intervention of the government post-listing, and how would you come in?
Thank you very much. So post-listing, Kenya Pipeline will then be a listed company in the Nairobi Securities Exchange. With that particular dynamic, then it will be subject to a number of regulators. So one of the new regulators that KPC will be subjected to will be the Capital Market Authority, where the trading of shares of KPC will all then be subject to the oversight of the Capital Markets Authority. From an operational perspective, the Energy and Petroleum Authority will continue oversighting its service offering, consumer protection aspects, and definitely even in terms of the service levels that it should adhere to. So in terms of consumer protection, protecting minority shareholders or the investing public, then all those concerns are basically addressed.
Or even the internal stakeholders, because there has been that concern that things will change once privatized and it would spell doom. As a last word here, give a reassurance to the Kenyan shareholder, the potential Kenyan shareholder, just the stakeholder who's watching this process, that everything will be or is above board as you follow this, because you are in the process right now of making sure that we are good to go, but having made sure that everything is catered for. What reassurance do you give that Kenyan?
Thank you very much. I think first and foremost is to even discuss the process. So this process of listing the Kenya Pipeline Corporation in the stock exchange started way back in 2009. So the program was formulated in 2009. After that, we've not been able to experience a new listing in the stock exchange after Safaricom, which is almost 17 years down the line. We are excited that now we will have a blue chip company coming to the stock exchange. It should excite Kenyans. It should excite our local investors. And we are happy that, using the mechanism of the capital markets, it allows every Kenyan an equal opportunity to own a piece of this very important gem, especially the hustlers, as we would reference. So basically, this will be an opportunity which will be available equitably to every Kenyan, regardless of how much money they can put in, and especially the small shareholders.
So it's clear from the get-go that the privatization isn't a means of washing the government's hands off of its responsibility and letting it leaving it to the devices of the capital markets. However, it is a process that has been well thought out, and there's been planning in this, and it's informed by where we are from in terms of economy and where we are looking to go. There is, though, a lot of focus on the day of the listing. And then people sit back. Is there reassurance that the government, National Treasury, and other stakeholders will follow through the process?
Thank you very much. From the government perspective, this is just the beginning of a great journey ahead. The government of Kenya will continue holding 35% shareholding in Kenya Pipeline Corporation, heralding its position as a strategic investor even going forward. And with this, our interest will basically be to make sure that we have continued success of KPC post-listing, and to protect both investors, protect consumers, and finally also protect and grow the petroleum industry. Thank you.
Wish we had a bell. It seems we are ready to trade. Sante sana.
Thank you very much, Mark, and you're welcome.
Sante.
Yes.